ask her to turn on her screen.
Here I am.
There we go. All right, guess what? It's still 2:00. I'll call the meeting to order.
Congratulations on your reelection, Geraldine.
Yes, Geraldine.
Well, thank you. I had stiff competition.
Yeah.
Yes, you did.
May I have the approval, a motion to approve the agenda, please?
I'll make a
So
motion.
moved.
Gloria, second. Me. Thank you, Sandy. All those in favor?
I,
Carried unanimously. You have all of that, Heather? Sorry.
Oh, Maxine's here today.
Now, we have the minutes of April 22nd, 2024. I'll give you 30 seconds to review them as they just arrived in our talk. Well, maybe they didn't. They arrived a week ago, didn't they? The minutes, yes.
I think we had it in email.
Are there any requests for changes? Hearing none, may I have a motion, please? to
So
approve?
moved.
Thank you, Randy. Thank you, Gloria, for seconding. All those in favor?
I,
Next on the agenda, the audit report. Lawrence Lake, over to you, Mr. Lake.
So, well, I assume we want to start with the village first. So, as I was going through, I did notice, so last night when I was putting in the numbers for the amount of the transfer, I pulled them out from my spreadsheet that calculated it up to 2023, but I didn't consider the effector of the current year. So we need to adjust that amount up for the fire's share of the current year surplus. So these will change slight just for that, but essentially that's the only change that needs to be made.
All right, so what page is that on, Lawrence?
When we get to it, I'll explain where. So,
Thank you.
okay, so the intervening paragraph is not, they're not technically correct now because I missed that. So we're gonna make a change for that. So we can jump to page 4, which is your statement of financial activities.
Mhm. Oh. Which is.
Our page what?
5, your
Your
page.
page,
7? No, 10.
Be 10 or 11, something
your
like that.
page 10.
Yeah.
10.
Okay, so
Lawrence, I'm sorry for interrupting you, but I am not hearing very well. I don't believe the audio is working very well. Would you please speak more slowly?
yeah, that's fine. I'll speak up. Is that better?
Thank you.
Okay. So if we start with the revenue, the one thing you'll see that's new is the Chester Fire Service Committee. And so that amount represents half of the amount that's on the other statements as revenue. And so because the way this works is that for the first year anyways, where you divested and then donated the assets and money that was related to fire. So we have the loss from the donation, and then we also are bringing back 50%. So it kind of nets some of that out. And there was also a bump in the value. So the removal of the assets was like 967,000. You'll see that when we get lower in the statements. But the value when they were set up, because they went by fair market value in the committee. And so they're 1.6 million. So you took out 967, but your half of 1.6 million is 800,000. So you really didn't go down that much on your statement because of that. So that's why the gain loss on disposal is only 108,000. Because there's 967 that you from your removing the assets, but because they got bumped up to fair market value, that 800,000 is then consolidated into these statements, netting that out to about 108,000. So,
Lawrence.
did you say that again in English?
believe me, this stuff is not that follow in. It's probably one of the more complicated things, especially in the first year. From now on, it would just be a matter of you would look at the other statement and half of that would be added to your statement. This year, you have like the donation of but we can call it donation or transfer, but essentially you're moving the assets out of the village and into the committee. So
Okay.
there's two components to that. The first is the reserves. And so if you see down below where it says donation to Chester Fire Services,
Yeah,
that's at 763,907 is the amount that we're taking out of the reserves to transfer. And then the asset amount was 967,000.
Sorry, Lawrence, my question for you is,
Yep.
does that include the 2023 tanker?
Yes, it does. Yeah, so everything was removed, and then the tanker for the new one was set up at 620,000 per the fair market value, or per the appraisal. So
I'm wondering if that makes a difference to,
In what sense?
for any outside interests.
No, yes.
Yeah, we had a new current value appraisal done on all the vehicles to be able to do the audit. So that's what Lawrence is able to base these figures on.
okay.
Yeah.
As the tanker was purchased in 2023,
2022.
still 2022
Mhm.
is post Chester Fire Services Agreement. And therefore, should it be included as anything applicable to the village taxpayers?
It was transferred along with all the other apparatus because they had already taken
I
possession.
understand that it was transferred, but should it be accounted for monetarily in that transfer? Or is it because it was purchased in 2022 and applicable to the Chester Fire Services arrangement with the municipality of the District of Chester and the Village of Chester? Is it relevant to the situation that we could be facing?
When we took possession of that vehicle, it was in the name of the village, so I believe it is still.
Even though there was the Chester Fire Services Committee in existence, and
But-
even though it was
Yeah,
not.
but they also didn't pay for it either. So that came up reserves village. So
Telephone.
yeah, and that's kind of the other thing about this is there's no activity in the Chester Fire Services for 23. Everything is essentially reported it under the village. I assume you guys are going to do operations for the fire services starting April 1st.
Correct.
Yeah. So again, if the going on that model, then everything would be transferred, and then you would just start operations as of April 1st of 24. So.
Okay. It's starting to become somewhat more clear. Thank you.
Okay. So your total revenue, including the transfer, your 50% of the CFSC was 1.5 million. The total expenses, including the donation to the CF, I'll just say commission. That's actually, or sorry, it should be committee. Sorry.
Okay.
And so was 1.7 million. So for overall on a consolidated basis, there's a loss of 227,000.
What page is that?
Bottom of the page.
We're still on the same page. Yeah, so 227,000. So if you go to the next, which is the statement of financial position.
Thank you.
So if you look under the accumulated surplus at the bottom, that changes the change there between your 3.8 million and 3.5 million. So your total accumulated surplus between reserves, investment capital assets, and your regular surpluses went down by 227,000.
Okay. I actually understood that. Thank you.
No problem. So we'll go back up to the financial assets. So cash on hand at the end of the year was 808,000 in operating, and then there's 37,000 that's in reserves. There's 938,000 in GICs, 27,000 of HST receivable. There's the receivable from the fire is half of the amount that they that you guys owe them. So if you look below in the payables, you see you owe them 726, and then because we record it back, to bring in 50% of their balance sheet, we have 50% receivable. So it's a funny situation where you have a payable of 726, then half of it is a receivable back. So, and I'm not, I think I did it this way just to make it more clear that you can see like the full numbers rather than net numbers. So in terms of payables, the biggest portion is they want the amount owing to the Chester Fire Services Committee. The regular payables are just your trade payables, and the deferred revenue increased by 100,000. There was another grant received for accessibility and the pool, so we have 250,000 there set aside to do projects in the upcoming year. So the change in your net financial assets is explained on the following page, and so there's a whole page that's set up to go over that change from 1.168 million to 1.196 million. So your net financial assets increased. In terms of non-financial assets, prepaid, and that was a fun one too, because there was prepaids that were actually the committees. And so they had to be moved over because the money had already been spent to purchase the insurance. And then when I bring it back in, I have to take half, add half back in. So it's a funny thing. In terms of property and equipment, the village removed like 1.5 million worth of assets and then added back the 800,000. So, and we'll see that as you go further on. So, and then your accumulated surplus, your reserves went down, and that's because the funds are being moved out of the reserves. So that's that $700,000 that's going to the new committee. Investment capital assets is not down that much, and that's because overall it went down by 967, but then you brought back in 800,000 for the value of the committees. So it only went down about 120,000 or so. And then your surplus actually went up, and that's because you're including half of the surplus of the committee there. So the next page explains the change in the net financial assets. So we start with the surplus, or sorry, the deficit of 227. There's 972 of tangible capital assets acquired. So really that's 153,000 was the villages, and then there's the 880,000 that's coming back from the 50% of the committee. Under the amortization, I assume we were going to amortize the assets, so I did full amortization before we transferred the assets because they were in use for the full year and it wasn't being transferred essentially till April 1st. So the loss on disposal was 967. So that's the amount that came out of the investment capital assets. And then your use of prepaids was 14,788. And so you have an increase in your net financial assets of 28,484, and you ends at 1,196,000. So, and what this kind of represents is if you had to take all of your current assets less your current liabilities, how much money would you have left? So
we're actually,
We're up a little.
we actually are up a little over last year despite all of this.
yeah, but so it's funny because that bump in the fair market value made the change not as big a deal. So the next one is your statement of change in financial position or cash flow statement. So we start with the deficit of 227. We add back the non-cash amortization of 275 and the non-cash just loss on disposal of 927. So the number for the 927 was that it's actually 967, but there was $40,000 of proceeds from the sale of the old fire truck. So that's why it's netting out at 927. And then there's changes in your working capital. So after from operations, you have 1.6 million generated. $938,000 of investments were purchased, and that's only because all the investments matured. So you had 829 mature and then 938 purchased. And then under tangible capital assets, there was 972 spent, but really that's 153 of village assets, and then the 800,000 of that's being brought in as part of the committee. So your cash increased by 626,000, and at the end of the year, you had 846,000 on hand. So.
Okay.
So the thing that needs to change is, actually, we'll get to that now. So the next few pages are the notes to the financial statements. They have the accounting policies that the village follows. We can go to note 2, the tangible capital assets on the page, your page 16.
Okay,
Oh,
There we go. So it's a little clearer to see here. So I have it split up between the village and then the Chester Fire Services Committee. So under the village, you started with 5 million in assets. There was $153,000 of additions in the year. Disposals was 2.8 million, and then so your closing amount of assets in the village was 2.3 million. Amortization was 275, and then your accumulated amortization went down to only 807 because we took out the amounts related to the assets that were disposed of. And your net book value of just the village is 1.528 million. And then under the Chester Fire Services Committee, we brought in half of their assets, which their assets came in at 16 million or 1.6 million. And so your share of that is 818,000. So we add that to the additions and add that to your total assets. There was no amortization because essentially they haven't been used and they've already been amortized. Anything would have been amortized in the village's side. So you'll start amortization next year in the Fire Services Committee. So at the end of the year, you have 2.347 million as a net book value in your total assets. So hopefully that makes it a little bit clearer because you have additions and then you have disposals, but then you're adding below half of the committee's value. So next is your accumulated net assets. So we started the year with 291, and this is where I need to make a change. So the operating change. So the operating had a surplus of 258,000. So the breakdown of that is 173 of that was fire, 78 was the village, and 5,500 was the EMC. So there should be another 173,000 that needs to be transferred to the fire. So essentially what will happen is that amount that was the donation to that 767 is going to go up by 173,000, and that will make the payable go up by the 173, and you'll get half of that back as a receivable on the other side. So in terms of investment capital assets, you started with 2.568 million. There was 50,000 of the loan was paid off in full. The last payment was made. There's contributions from reserves for 153,000 of new asset purchases. And then your loss on disposal of the assets. So this is the net book value of the assets that were removed and donated to the committee was 967,000. And then your amortization was 275,000. So you have 1.528 million in your investment capital assets in the village. And then you have 818,000 of investment capital assets from the Fire Services Committee. So your 2.347 is your total amount in investment and capital assets. And once the assets are transferred, you'll only see like half of that amount being added to yours. You won't have this amount owing still, so it should be clearer going forward. It's just because it's still owing, and then we're showing part of it as receivable back, right? So in the future, it would just be you take their balance sheet and take half of every amount and half of the income and half the expenses and just add it to your statement. So we'll do that separately, so it's very clear. Okay, so the next page is other matters. That's just the required disclosure under FRAM. We adjusted the budget because you guys budget to be like a balanced budget, but you don't budget for amortization and capital, and purchases out of the operating are not supposed to be expense. So this is just down a little bit under the budget. So what it essentially does is it takes your zero balance budget and makes your surplus 141,000. And then I added another note under note 8 for the next page. And that just explains the transactions that happened with the Chester Fire Services Committee. Essentially, you've divested your fire equipment and donated the funds, and that you're as an intermunicipal community or committee incorporated to provide fire services to the village and the municipality of Chester. So the next few pages are your schedules to the supplemental of the statement of operations. Gives them more detail of like general government services. Pretty well on par with budget in last year, 171, 168 last year, 173 for the budget. Under the pool, budget was 61, expenses came in at 55, and there were 49 last year. Under seasonal, your budget was 73, came in at 67, it was 55 last year. And you see these numbers on a regular basis. There shouldn't be any surprises here.
Yeah.
Under fire protection services, your budget was 368 and 383 in total was spent. So during the year, there was the fire was services got their own insurance. So, and that also changed your insurance to be October to October. So there was a portion of that was set up as prepaid because it relates to next year. And that was also part of the transfer to the committee. And the last page is your reserves. So if you want to go start with the bottom part, the statement of change and the reserve balances. So under the building reserve, we started with 21,000. There was $828 of interest earned. There was $23,000 transferred from operations, and then $16,000 was spent, and that's the money that's for the roof. Essentially, it had the payment was made in March for the down payment, making the whole invoice payable. So that's part of payables. Under the fire truck reserve, we start with 555. There was $21,000 of interest earned. There was $40,000 received for the sale of the truck. So that left $617,000 in the reserve, and then we transferred that amount to the Chester Fire Services Committee. Under the Liddell pool, there was $123,000. $4,600 of interest was earned. $30,000 was transferred from operations, and so at the end of the year, there's $158,000 in the reserve. Under operating reserve, we start with $213,000. $8,142 was earned in interest. $3,300 was transferred from operations. And then the portion here, this is the fire services portion based on the calculation up to 2023. So I'm going to increase that amount up to by 173, but the reserve doesn't have enough money. So I will probably just take that amount as set up as payable. It can be paid out of the 800,000 of cash on hand. So under the utilities reserve, there's just a little bit of interest earned in the year, 1,405. So there's 38,689 at the end of the year. Equipment reserve, essentially these are the purchases that came from operations. $137,000 of fire equipment was purchased with funds from operations, and so it was transferred in. The assets were purchased, and the balance is zero at the end of the year. On the balance sheet side of above, the HST was received, but the money didn't go into the reserve, so there's a due to from relating to that. The GICs there's 938,000 in GICs, and they range from 4 to 4.75%, and the latest that any of them matures is October of 24. So. And then the 37,143, there was an outstanding transfer into the reserve, so I recorded it as cash because it didn't make it to the GIC yet, but it was shown as out of the bank of the operations bank. And then the accounts receivable is your accrued interest on your GICs. The 27,248 is the difference between the face value of the GIC and the amount of interest earned as of March 31. So at the end of the year in total, you had 304,872 in reserve, and that's after transferring 763,000 to the Chester Fire Services Committee. So. Does anyone have any questions on that? I know it's not very clear, and I struggled myself to make all the numbers work right. So.
Yeah, just to circle back later, Lawrence, I'll want to just go through the breakdown of the operating reserves in a bit more detail, but you and I can talk on about that.
Sure.
But thank you for having the numbers.
Yeah. Any other questions relating to the financials? Essentially, guys.
Aside from Sandy, does anyone know enough? Ask any question.
So Lawrence,
Knowing the background.
under the Chester Fire Services Committee, the total for 2024 under assets due to Chester Fire Services Committee is $304,872.
Which
Yeah.
page?
Pardon?
21.
Are you on the reserve page?
Yeah, your page 15,
Yeah.
the one we
Yeah,
were just on.
Yeah,
Yeah.
so 304,872. And then there's, and.
So there's 763,000 owing to the fire reserve, so.
All right.
That would be the apparatus reserve plus the,
Operating reserves, the operating reserve.
All right, so Heather, you're going to break that down into actual.
yeah, what gets moved where.
Yeah. Because you're seeing that the transfer to the CSC. In the statement of changes in reserve fund balance is 146,606. Are those two numbers connected?
Sorry,
Which one are you looking at?
You know what, never mind, Heather will talk with you and inform us.
Sure.
Thank you. So are we moving on, or this is just statements? Are there numbers here for
Fire service?
the fire service? Yeah.
Yeah, so the fire service. So these will change because I have to increase the transfer by 173,000. So you can jump to page 3, which is the consolidated statement of financial position. These ones are much simpler because there's only 1 year, and so the accounts receivable represents the amount owed from the village, and that's going to increase by 173,000. So it's 726. So the transfer is 763 from the reserve, but the prepaids transfer, so that reduces the amount down to 726. And then, so under the non-financial assets, you have 37,230 of insurance as prepaid, because that was paid for with funds from last year. And then your tangible capital assets is 1.6 million, and there's a breakdown of that in note 3. So your accumulated surplus is 2.4 million. So essentially, there's the value is of the total amount of your accumulated surplus in the fire service committee is 2.4 million.
So, can I ask?
Yes, please.
Yeah, so does that, so will that number change? You mentioned there was 173,000 that had to be
Yeah.
added.
That
So
will go up by 173.
right, so the 2,200,004 plus 173.
Yes, that's correct.
Thank you.
So the next page is your statement of operations. Essentially, it's just that 2.4 million as a donation from the village. And then the next page is your statement change in net financial assets. So there's 2.4 million, 1.6 million of it was tangible capital assets, 37,000 of it was prepaid, and then the other 726,000 is your overall increase in net financial assets. So that would be the amount of cash you would have available out of that 2.4 million. And that will go up by 173,000. So yeah. So you have about $900,000 altogether once that other 173,000 is added. So next is the consolidated statement of cash flow. We start with our surplus of 2.4 million. $726,000 is accounts receivable, 37,000 is prepaid, and then the assets is 1.6 million. So essentially, your cash on hand is 0 because essentially you have a receivable and assets. So the next few pages are the notes of the financials. I assume you're going to follow the same policies as the village does for accounting policies. If any of these need to be changed, just let me know. It still falls under public sector accounting standards because it is an intermunicipal corporation. So, but if there's any changes,
that was my understanding, Lawrence, that it would have to follow the same.
So the only real information in there is on note 3, which is the breakdown of the tangible capital assets. So that's just the amortization rates. I use the same as the village uses, so. And that would be the requirements per frame, so.
Under buildings, the 51,753
Yeah.
is the final payment of the loan.
Nope, so that 51,000 is the amount that was been spent on the new, the project to get the architectural work. I don't know if we want to call it
Yes,
buildings or if we want to call it something else. But I assume leading towards a building, and I didn't think you wanted to expense it because usually the cost of getting your architectural plans would be capitalized, assuming it goes forward. And then if it doesn't go forward for some reason, then you would expense it.
Okay.
yes, it's going to take some time
Yeah.
to differentiate between buildings in the village side, which has always been allocated to the fire station building, not the EHS building. So it's important to keep that differentiation solidified.
There is no building reserve in the village.
There was under fire. The building reserve in the village financial statement referred only to the fire hall. Yeah, not,
That has EHS in it as well.
Yeah, but there is no longer a building.
I know, and that's what has
Yeah.
to be made clear,
Okay,
and I beg to differ. It was the 300 and some odd thousand that was in the building reserve was just the fire hall, because we had a separate account for EHS on which checks were written. And it was when Dennis Edgerton decided, oh, I'll just roll this into the general operating account, and boom, it disappeared. So we're starting over again.
I actually have a separate equity account for that. So I track the equity of the EMC building.
That's right, yeah, but in 20
5,000
something or other,
of equity in there.
in 20 something or other, I can't tell you the exact date. Before the third quarter draw was received, we had $700 in the village checking account that definitely did not reflect the 46,000 or whatever it was that was rolled into the general account from EHS at that time, or 6 months previous. Sorry, I'll get off my soapbox now, Lawrence.
No worries. So machinery and equipment is everything other than the vehicles, and the vehicles are 1.2 million, and that's all per the actuary, sorry, the appraiser. So
Okay,
any questions on these? So these ones are going to go up 173, and so you'll end up with 900,000 of cash in that one, and then the rest would be assets.
Thanks, Lawrence. Yeah. Any more questions, ladies and gentlemen? Speak now or forever hold your peace.
I think my brain has settled on, I vaguely understand it.
Good.
well, and we do have time before the public meeting next week to take it in a little bit more, and if you have further questions, by all means.
Get it
pass
whipped
them
into
on.
the final shape.
Yeah.
before that meeting.
By all means, pass them on, and I can take them to Lawrence.
I'm anxious to hear what the bottom line is in the general government reserve and the fire services operating reserve. Because I have my own little estimate of what it should be. but that doesn't include budgeted amounts from previous years that were transacted in the previous year, but, or paid for in the next year, but transacted in the previous year.
Like, for instance, all of our transfers to reserve happened at the end of the fiscal year.
I'm
That
not
were
talking
budgeted
about
for
that, I'm
in
talking
the
about
budget.
budget to actual.
Right.
But budget to actuals, not your definitive number there, because you guys budget a lot of items that are capital. So they don't end up showing up because they are added to the capital assets, so they don't show up in the budget line anymore. So it looks like you're under budget, but that's because the money was transferred to the reserve to purchase the assets.
Right.
So budget to actual is not going to give you the exact number you need, so.
Well, I'll just wait for the bottom line.
Are we solvent? That's.
Okay, yeah, you have money at the end of the year, so you're good.
Yeah, we're good. That's all that worries me.
Well, even,
Yeah, you have, I believe, over 800,000 in cash and 983,000 in GICs, and the only amount that has to be transferred is the 763 from the reserve, which would be the GICs you'll cash and then just transfer the money, and then there'd be another 173,000 that has to come out of your bank account. So.
all right. Thank you, Lawrence.
Thank you, Lawrence.
Thank you.
Thank you.
Thanks.
There is no in-camera, so there are no further questions to Mr. Lake. Thanks. There is no in-camera session, therefore no need to resume the public meeting except, well, this is all live. Reminder that the annual public meeting is June 18th at 6:30 at St. Stephen's Community Center. I don't believe there is any further business, so may I have a motion to adjourn? Thank you, Gloria. Done. Thank you, Lawrence.
Thanks. I'll make those changes and send a second draft.
Thank you.
Thank you.